Is Genesis going to take the entire crypto industry down?
Bankless Nation, happy Thursday of November. Happy Thanksgiving to you if you are in the US and enjoying the holiday. David, what time is it?
Oh, Ryan, it's the Thursday Bankless Weekly Roll-Up, where we cover the entire, well, not the entire week, 4 days in crypto, which is still an ambitious endeavor, even though we're missing a day. Yet, great. So we persevere into the frontier nonetheless with coffee, among other things.
Great modifications, David. People are really going to appreciate that.
I had to do that on the seat of my pants.
Maybe turkey too. I don't know. Yeah. Look, if you think anyone's actually listening to this on Thanksgiving, maybe they're on their way.
They are,
to a Thanksgiving meal with their family, and they're wondering what the heck they're going to say when their friends and family ask them about crypto.
That Sam Bankman-Fried, that complex, controversial Sam Bankman-Fried character. Yeah.
So how's it going in crypto these days? We know you love it. We know you're into it. What's happening? I bet that's going to be a question.
We're going to prepare you for that question too. I'm going to ask Ryan how he's going to prepare for that question, and I'm sure he's going to ask me the same.
David, what are your Thanksgiving plans? You going somewhere? I know you are, but tell me more.
After we record this roll-up, go take a long cab to Newark, fly home. Get to see my 1.5-year-old nephew, see how much he's turned into a chatterbox, apparently. I keep on joking with my family that I'm going to turn him into a podcaster.
Do you know what's awesome, though, is being able to spend some time with normal people for a while?
It's
right?
rare. It's rare for me, let me tell you.
I know you moved to New York to hang out with crypto friends and such. And I hang out with, I guess, virtually a lot of crypto people as well. It's just crypto talk, blah, 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 right? Just to talk about regular things for a while, especially after the month that was November so far. That's actually going to feel pretty refreshing to me. Anyway, what do we got this week coming up?
Oh my God. So we, of course, have to talk about the Genesis contagion. Is Genesis going to take the entire crypto industry down? We'll talk about that. FTX, of course, there's still plenty to talk about FTX there. This news has, of course, gone on to Capitol Hill, where there is a bankruptcy hearing going on. And third, a DEX hack on Solana leads to an exploiter shorting Curve using Aave, and then that exploiter getting liquidated because of a short squeeze, leaving bad debt in Aave. What the hell are we going to do about that? We'll get into that story and more. But first, please like and subscribe, because Ryan and I, like we always say at the beginning of the show, persevere into the frontier nonetheless. And sometimes it really just helps to get those likes and reviews and those subscriptions. So if you are watching on YouTube, please subscribe. If you are listening to the podcast, please give us a 5-star review so we can get to the top of the charts and make it through this bear market.
Absolutely. We're thankful for you, Bankless Nation, for tuning in. We have a lot in store in 2023. We're not going anywhere. In fact, we are doubling down, tripling down on content. In fact, there will be a few ways to get involved with that. Some alpha that will drop in the episode today. Some deals coming out of Bankless too. But before we get there, David, got to talk about our friends and sponsors over at Infura. Infura, of course, they run archival nodes for Ethereum, among other smart contract networks. If you've ever used something like MetaMask, for example, they are an RPC client. So that means they provide some of the historical data node architecture that serves up your MetaMask transactions and the cool things that you're doing in DeFi. Maybe you know about Infura, maybe you don't. What you might not know is they are taking steps moving forward to decentralize their infrastructure. Okay, previously this has been quite centralized, including a centralization vector. But if we're going to rebuild on the other side of this bear market, and during the bear market, we need to rebuild it on decentralized rails. So how can folks get involved in what Infura is doing, and how should they tap in, David?
Oh, I think they should just go ahead and click the link in the show notes, Ryan, where you can join the early access program for Infura's new decentralized infrastructure network. So how do we take the service and products that Infura has and turn them into a network, a protocol, a permissionless system that anyone can join? That is the frontier that Infura is taking on. And if you want to join in that journey into the frontier, man, I'm really milking this metaphor today. You can click the link in the show notes to sign up and get your expertise and your information over to Infura so they can coordinate.
All right, David, speaking of coordination, I guess price markets, what is that? It's just a coordination game. So let's get to the markets, all right? let's talk about Bitcoin and the price. And I was told, by the way, our editors might throw in some music here, and it's gonna be sad music if we manage to do that. It's gonna be sad music this week because what, David? Are we up or are we down?
We are down. Well, actually, I would say Bitcoin is inside of the flat range, down 1.3%. So started at 16,500, ending at 16,300. Like, that's just like, you're just kind of flattish at that point.
Some green candles toward the end of this.
Some recovery candles at the very end to make it not so bad.
How about
I mean, we're still like at the whole like year.
Yeah, look at this clip. Look at November.
November's still a bad month. Yeah.
This is the FTX drop, right? Sam Bankman, thank you very much for that one. Appreciate you. Okay, how about ETH? Up or down?
Down. Start of the week at $1,210, currently at $1,150, down about 4.8%. So oof.
Okay, so still above in the 4-digit mode actually. In fact, like fairly well into.
So you haven't bought yet then, huh?
I am planning some buys. But I'm tempted just a little bit. Okay. But like, I'm still also waiting for triple digit. I think triple digit is coming, David. I could be wrong, but
I mean, you said last time you said it, I was like, get the hell out of here. And then you turned out to be right. And this time I'm like, get the hell out of here. I think we're done with triple digits. I think it's over.
You think we're done with triple digits?
If it wasn't just, if it didn't happen just now, like yesterday with the DCG news, then I don't know how it's going to happen. Here's the thing.
You're talking local crypto, though. All right. We still got macro ahead. We haven't talked about macro. And I think we've got some tailwinds on the macro front that could send us down. Also, we're still getting attention. I mean, even though bad things are happening, we've got eyeballs on the space. Sure. Anytime you get eyeballs on the space, you get some price action. Sometimes it's negative, sometimes it's positive. But the worst possible time for markets is the doldrum period.
When no one cares.
No one cares. It's
so you could be waiting for triple digits at like, Q3 or Q4 2023.
Is not a spike down. Triple digits is apathy, my friend.
Yeah, that's
look. I think
apathy liquidation candle. Yeah.
But call us, all right? The David versus Ryan bet. It's on. We headed to triple digits or not? How long can David last? We will see. To be continued.
David makes another bottom call. Great. Fantastic.
The contraindicator.
Add another one to the closet.
We'll see. You might be right on this one, though. But
if I keep on calling them, eventually I'll be right.
I, for one, am thankful for David bottom calls because, they give us some historical perspective here. Yeah. What's this one? ETH Bitcoin ratio? Any bottoms you want to call here?
Yeah. Ignoring that. 3.5% down on the week to 0.0706.
Down.
Down.
Okay, total crypto market cap. Give us the numbers.
We lost $10 billion. We are down to $850 billion in total crypto market cap.
All right, still, decently below $1 trillion. All right, you know what? Let's zoom out for a minute because there are some other people that are like my friend David here, and they're calling the bottom right now.
There are other bottom callers, not just me. Yes.
Not the other. And by the way, I am calling a bottom-ish. See, David, I like to hedge. I like to be in all camps at once.
You're saying we're close to the bottom?
I'm saying please also call me a bottom caller, but approximate bottom caller. I'm not going to put a number on it. I still think it's triple digits, but like we're in the zone, my friends.
Plus or minus 10% or something?
That's what I think. And this is one of my favorite charts to look at. It's sad, but it's the chart that I was like, it's not a chart. It's a percentage. It's a metric that I was glued to in like 2018, 2019, previous bear cycles. And this is percentage down from all-time high. I really like this as a metric during the bear market. It's a painful metric, but you can also see like the precedent that we've set before. So just some context. I remember these numbers are burned into my brain. Bitcoin last bear market down from all-time high about 83%, something around this range. Ethereum down 94% into 95. I think you got like if you round it, it's 95%. I thought we were stopping last cycle at 90%. And I was like, there's no way we're going to 95. And we did.
Okay. And also to drive that point home, the difference between going down 90% and 95% is another 50% drop. It is not 5 more percent. It is 50 more percent.
And boy, that last 50 hits you.
It really hurts. That one is the knife to the heart, man.
All right. So let's look at where we are right now in the percentage down from all-time high is a proxy for pain to me.
Yes.
It's like how much pain are we in? Duration is another one because that brings the apathy, but like raw pain that you're feeling in the pit of your stomach. Right now, Bitcoin is 76% down from all-time high. Compare that to 83% last time bottom. Ethereum down 76% as well.
Yeah, that's unprecedented.
Crazy.
Yeah.
Crazy that these two assets are down, like, because Bitcoin was supposed to be the king asset.
Right.
When there's a bear market, there's a flight to safety, there's a flight to stablecoins, a flight to Bitcoin, and we're seeing Ethereum hold up the same.
And that is after, Ryan, the FTX exploiter hacker sells a bunch of Ether for Bitcoin, which is a one-time sell event and not systemic. And
True.
so, like,
that's locally. That's true.
That's
yes.
locally, yes.
So like, not a ton of pain in these two ecosystems, to be honest, compared to what we've seen. Certainly Ethereum,
only
we've had
76%. Like, whatever.
Look, that's just a flesh wound, my friend.
Right.
Well, why is Tether down 20% from
that's kind of an anomaly.
Never mind. BNB, look how the CZ empire is holding up. 57% down from all-time high.
And this is because of the buyback and burn mechanism in BNB, which I will remind listeners is the similar mechanism as EIP 1559 in Ethereum.
It's also because the CZ empire has held very steady during this so far.
Yeah,
and he's just knocked out a few competitors. But other decentralized networks, let's talk about Cardano, for instance. 90% off.
90%. Oof.
All right. Last time they went to like 98, 99% from all-time high.
Right.
Dogecoin 90%, Polygon 71%, layer 2 token hanging in there.
That beat both Bitcoin and Ethereum, didn't it? Yep.
Polkadot 90%. This is also the proving ground of like,
right.
how many holders do you have? And you see this in the numbers. Like, people don't have faith in Polkadot right now in comparison to Polygon. Litecoin 81%. God only knows what that means. Who's holding Litecoin? I don't know. Solana, David, look at this.
95%. And this is what I've been saying. Like, the Solana community, from what I've seen on Twitter, is still around. Yes. And they are still pretty bullish on their ecosystem.
That's impressive.
I am not necessarily like interested in Solana, the technology, but I am impressed that the community around Solana is still holding out, and they are down as bad as we were, Ryan, back in 2018. And so that interests me.
That is interesting. If a community can survive this, that is an interesting thing. Like the Cardano community survived this. And regardless of what you think of the network, the community survived, and that led to a more bullish return. Maybe the last one I'll read out is Avalanche. That's down 91% from all-time high. But Atoms, on the other hand,
I don't know where the Avalanche community is. I haven't heard a peep out of any AVAX person in my Twitter mentions in a while.
It's been real quiet. Like their equivalent ICO, they're having kind of their ICO exit.
Sure.
All the unlocked coins get, all the locked coins get unlocked. Anyway,
all of the 3 Arrows Capital locked AVAX tokens.
Yes. So that's where we are. All right. Who's calling the bottom, though? Bottom caller number 1. Who's this, David?
Kathy Wood goes on Coinbase and GBTC buying spree. I'm not sure if you're calling the bottom with that, but it's just implied. Kathy Wood of ARK Invest, she buys 1.3 million shares of Coin, coming in at $56 million. And she also bought 315,000 shares of GBTC, basically the Grayscale Bitcoin Trust, at $2.5 million. So Kathy Wood going to the market.
There you go. Not afraid to call the bottom. Kathy's also not afraid to buy the top as well, as we've seen, I think, a little bit.
Kathy's just a buyer, and that's why we like her.
There you go. Dollar cost average in. Who's this?
Here's Kobe. Kobe is calling the bottom in fantastic Kobe fashion. Kobe tweets out, "The way I see it, it's up to us now. Probs can't sit around on the benches anymore. To the arena." This is, for those that don't speak Kobe, this is Kobe calling the bottom.
You think he's called the bottom?
He's
I can't sit in the benches anymore, to the arena. You have to read a lot into that to be like, that's a bottom call, but that's what you're reading?
Yeah. That's
All right. So that's happening. And of course, we talked about Chris Berninski last time. He's been calling the bottom. We put out a podcast on that last week. Well, let's talk about another thing that's happening in the markets, and this is the journey towards people going bankless. What are we looking at here?
We are looking at, Ryan, people going bankless. So this is a chart of the amount of assets, AUM, of all centralized exchanges. And so right before the FTX demise, we were coming in at basically $130 billion of money inside exchanges. Then the FTX happens, and we are now clocking in at just above $100 billion. So we almost have $30 billion of people taking, We also lost some capital, so there's that. But also, people have taken a lot of that money off of exchanges into self-custody. If it's not on a centralized exchange, it's in self-custody. So we are watching people in real time take custody over their assets. Cool. We like that.
Is that okay, David? I mean, they're doing it out of fear rather than love. They're going bankless.
That's fine. It doesn't matter. That's fine.
We'll take them. Fear or love, either whatever the motivation is, we'll take it. This is some interesting motivation, some metrics coming out of Polygon on Uniswap as well. What are we looking at?
Yeah, Polygon, the Uniswap implementation on Polygon hit its all-time high in volume numbers with 10 days to go in November. So this is monthly volume, and November has already beaten all previous months in terms of all-time high. And we still have, and at the time that this was tweeted, we still had 10 days to go. So Polygon, Uniswap on Polygon putting in some massive numbers. I think that's, wow, is that, $3.3 billion so far in the first 20 days of November. So congrats to the Uniswap implementation on Polygon.
Yeah,
I've never congratulated a specific implementation of a protocol before, but here we go.
Congrats on the version update to iOS software to Apple.
Yeah.
Fantastic. Well, it's cool. I mean, Uniswap on main chain hit all-time highs too. I mean, we not all-time highs, excuse me, but we're just crushing it in terms of volume. Last week we were talking about that. This is, though, I think this is my favorite chart right now in all of crypto. It's the only chart that makes me bullish, I guess. What are we looking at here? This is a chart from Token Terminal, and it is, I think, something that I hope has been impressed upon regular Bankless listeners' heads. A concept that we've been talking about from the very beginning. But why don't you explain the chart, and then we can talk about the significance here.
Okay, so on this chart, we see two things. We see the purple line, which is the ETH price chart. I'm sure no one really needed that because we all know what the chart looks like probably. The green area, which largely corresponds with the actual price chart. When there's spikes in the price chart, there's definitely spikes in the green area. The green area, and there's two different axes here. You have, of course, the ETH price or the ETH market cap. And then you also have revenue. And that is what the green thing is. The green mass.
The green thing is profit, I believe, actually. It's earnings.
Oh, it's earnings. Excuse me. Okay, so net revenue, right? Net earnings.
Yes,
right?
And how do we calculate? So the way we calculate earnings is we take revenue minus costs, effectively.
Fees, transaction fees.
Yes.
Minus block reward issuance. So how much people spend on a transaction aggregated into a block minus how much ether that block issues.
Yes. And so as we've said, I hope this is nailed into people's heads. What do blockchains sell, David? What do they sell?
Block space. They spell block space, Ryan. That's the only thing that they have.
The
thing
that they sell is block space. All right.
Yes.
So blockchains sell blocks. Blockchains sell blocks. This is the profit on the sale of blocks for Ethereum. You're seeing that in green. And by the way, this is an all-time history chart for Ethereum.
It goes all the way back.
And so what are we seeing in the green, David, from the early days up until now?
Up until now, when the price of Ether goes up, the loss of Ethereum, the negative earnings goes up. And this is the fundamental problem with proof of work, is that as Ether goes up, the size of the block reward goes up, right? So Ether started at $10, and then in 2017, it got up to $1,400. So the revenue that was coming, the issuance coming out of Ethereum for every single block did a 14x, right? That was just sold. That wasn't captured. That was just sold. That's loss, because that is what Ethereum is not collecting enough transaction fee revenue to offset the amount of Ether that they are issuing.
Basically selling its product at a loss. And
right.
The higher the price goes.
And it's worse in bull markets.
Yeah,
it's not
the deeper
better.
The loss. Exactly.
Yes. And so the higher transaction fees under a proof of work paradigm, the higher the price of Ether, the bit more the loss Ethereum has because the US dollar amount is sold. If you controlled for Ether, this would be a different story. But this is what we're looking at in dollars. At the very end of this chart, if you zoom all the way into the very end, where there's the merge, you can see that all of the loss goes away. And there's little bits of profit. You can see small little spikes to the upside. But of course, if we went to ultrasound.money, you would see how much we have been able to recapture via the combination of EIP 1559 and proof of stake.
Okay.
Anyways, the point is that Ethereum is now profitable. We are in the green.
For the first time ever.
In all of crypto, the entire industry, the first profitable blockchain. That happened with the merge, and now we are seeing some data on this.
It's happening in a bear market when people aren't looking. Do you know what this reminds me of a little bit? Is do you know Amazon during the .com bust? People are like, it's over. .coms are over. Amazon goes down 95%. Okay, during that time, it was absolutely crushing it. In terms of market, in terms of the core metrics for people who are looking, but no one noticed. Why? Because websites were dead, like .coms were dead. Amazon was never coming back. These are the sorts of silent metrics we should be looking at here, and only people who are in the space and who haven't left, only the settlers, not the tourists, are paying attention, because this is, by the way, the first blockchain in history to ever go profitable, and it's not happening during a bull run. It's happening easy. When it's easy. It's happening during the bear run, and I think, David, you have some extrapolation on these numbers, because I was looking at the agenda and you somehow slipped this in.
I put in my research hat and my data analysis hat, and I made an extrapolation for the next bull run, and I put that into this chart here.
Explain to me how you extrapolated the profit in the next bull run.
So what I did is, you actually might notice that the shape of the green revenue chart on the right is the same shape as the green loss revenue in the 2017, and I flipped it and I made it way bigger. And that is my projection.
David is roughly projecting that all of this loss turns to profit on the other side during the bull market, and we all know who are the recipients of that profit. Who gets the upside on this?
That's a good question. Is it Ether holders?
I think it might be, David. I think it might be. Anyway, look, that's happening in the background. It's a chart that makes both David and myself
optimistic,
stupid, and bullish again.
God, imagine, Ryan, if it was going in the opposite direction, if it was negative and all this bad news, it'd be like, sweet, there's like literally nothing that's cool about crypto right now.
Guys, I just want to say, this is not the story for all chains. This is the other thing, right? Is like, you have to decide if you're going to hold through this bear market. You have to decide what assets you're going to hold, what you have conviction on coming out of this.
Perhaps the one that's generating revenue.
You can't see this story in other chains. You won't see this. Nothing against other communities and such, but
except for BNB, because that's what the buyback and burn chain. BNB chain has this similar mechanism. It's manual, but it's fine.
Sure. In bottom line, what does this mean? Is the block space that we're selling, the product that we're selling, is profitable now, and it hasn't previously been until now. I think we've beaten that dead horse. Here's something cool, though. All right, so this is Thursday when this episode is released, but on Friday, Bankless is doing a Black Friday deal, okay? And so we have this thing, if you've never gotten into kind of the newsletter side of things, or the membership side of things, we have this thing we call a Bankless Premium membership. All sorts of great perks. The newsletter, you get the premium podcast feed, you get all sorts of content,
has no
extras. Ads. Yes, and you get you also get our airdrop reports. You get all kind of our token ratings reports, all sorts of things. And this is actually, because it's been such a crazy bad month, and because it's Black Friday, this is the most discounted we've ever offered a Bankless subscription. I'm looking at a draft email here, but it's set to go out tomorrow morning, Friday morning. So if you want to get the 25% discount, the way you do it is you go to newsletter.banklesshq.com and sign up. You will get this email delivered to you, and you have the opportunity to upgrade to Bankless Premium for 25% off. This will only be like a Black Friday thing. I think it expires.
Have we ever done a discount before, Ryan?
We have done discounts in the past, but never this high. This is a 25% discount. And when we do discounts, it's always a very time-limited window, and this is the biggest one, time-limited. So anyway, if you've been looking for an excuse to upgrade to Bankless Premium, see what oh, by the way, I didn't even...
Yeah, there is a huge excuse to upgrade to Bankless Premium.
Why? What are we doing next year?
Because you might notice some interesting new branding, some new images going out into what we are calling Bankless 2.0. We are migrating from Substack onto our own platform, got our own website, own designers. It looks so good. And we now have Bankless's own self-sovereign hub for cooler and neater things. And so Bankless, during the last bear market, went from 0 to 1, as in we didn't exist, and then we existed. And now we're going from 1 to 10, it feels like. And this
Wait, you said this was 2.0, but it's a 10x improvement.
It's always it's about a one order of magnitude of growth, and this is part of that story. Bankless is going to look brand new very soon.
It's going to be great. We're going to incorporate collectibles. We're going to incorporate the POAP badges. Anyway, that's not here yet. That's like
but
January-ish,
you get 25% off when it comes.
Yeah, you're not going to get 25% when everyone wants it.
Yes, exactly.
All right. Well,
that's the point.
We might be reminding you once or twice as well about this throughout the course of the show. We really want you guys into this. I think it'd be cool to kind of grow the nation this way. All right, we got some stuff coming up next, David. What are we going to talk about?
Is Genesis going to take down the industry, Ryan?
That
is what everyone is worried about. The FTX story continues all the way to Capitol Hill. And like I said, Aave is left with bad debt after someone tries to short Curve. And then Curve sucker punched that Curve shorter by releasing a new stablecoin product, and they got liquidated. Yeah. Anyways, we're going to tell those stories and more right after we talk to some of these fantastic sponsors that help you go bankless. The Brave Wallet is your secure multi-chain on-ramp into Web3, and it's built directly into the Brave privacy browser. Gone are the days of managing multiple wallet extensions that put you at risk of phishing, spoofs, and tracking. With the Brave Wallet, you can securely manage your crypto assets across more than 100 different chains, including Ethereum, Layer 2s, Solana, and more, all without downloading risky extensions. The Brave Wallet is easy to set up and removes the headache of jumping between wallets and extensions. It's lightweight, but packed with great features, like built-in token swaps, buying and holding NFTs with a gallery view, and support for hardware wallets. But also much more than that, because Brave is shipping new features every single month, with a mission to make Web3 easier to navigate for its over 55 million users. Wallet extensions are a thing of the past, so get started with Brave's Web3 ready browser today and experience a decentralized web seamlessly without all the clutter. You can download the browser at brave.com/bankless and click the wallet icon to get started. TRUEFI is DeFi's largest credit protocol, connecting global lenders with institutional-grade lending opportunities. TRUEFI has completed over $1.7 billion in originations and paid out nearly $35 million to lenders, proving that DeFi is ready to take its next big leap into the $8 trillion credit market. TRUEFI gives lenders like you access to sustainable, high-yield opportunities backed by real-world investments, usually reserved for high-net-worth individuals. At the same time, fund managers use TRUEFI's financial infrastructure to bring their portfolios on-chain, benefiting from the global liquidity, cost savings, and transparency of DeFi. TRUEFI is a decentralized financial utility. The protocol is owned and governed by the TRUEFI DAO, and TRUEFI is here to bring DeFi into the golden age, bridging the power and access of crypto with institutional-grade lending opportunities and portfolio tooling. Explore the diverse financial opportunities available on TRUEFI or launch your own portfolio at truefi.io.
The question on everyone's mind going into this Thanksgiving, will Genesis fail? The Barry Silbert Empire, Grayscale, Genesis, is this the next point of contagion? David, we've got some things that are developing this week. Can you tell us the story of DCG Group, Genesis, Grayscale, and what we need to know at this point in time?
All the way back in June of 2021, Ryan, almost a year and a half ago, Barry Silbert, who's the head guy at Digital Currency Group, who's very informed, been an OG, been around since like 2012, 2013. He tweets out, and if you remember, June is right after that big liquidation candle from like Ether's all-time high at the time from $4,300 down to like $1,700. Bitcoin goes from 60.
I barely remember that, but yes.
Right. It was the first big drawdown after the bull market started. Okay. And Barry Silbert says, he tweets out right after that happened, there's a daisy chain of borrowers and lenders in the crypto space, most well capitalized, but some are not. Lots of leverage still in the system, including some non-obvious places. Important to understand counterparty risk and where the weak links are in the chain. Wow, does that tweet hit different now? As it turns out, it would take a year for all of that daisy chain of liquidation events to show up. And Ryan, that is the video that you and I made yesterday.
Yes.
So it was a hour and 50-minute long video. This was
Charlie
me.
From
I was Charlie from Always Sunny doing the whole like conspiracy thing, starting with going all the way back to 2020 when the GBTC trade was on, and how 3 Arrows Capital leveled up on that, and then they went long on Bitcoin and Ether, and then they went long on Soluna AVAX, and then they got liquidated, and that got liquidated on Alameda.
It's a riveting tale.
It's pretty crazy, honestly, that people are gonna. Anyways, Genesis is the final piece of that puzzle. And
we're calling the final domino.
We're calling the final domino, and that is why everyone is like so worried about Genesis, is because it is the foundation of everything. What is Genesis? It is probably the biggest lending desk in all of crypto. It is the only prime brokerage for all of crypto. Facilitated so much of the basal levels of yield across the space, the Gemini Earn program, etc. And so the fact that we have arrived here at Genesis is indicative of like this is the last domino. This is the last one.
Named, arrived at Genesis.
Right? I've been thinking about that.
There's almost something biblical
Genesis.
about that.
Right.
Okay, so just for people who don't know what a prime brokerage is, just think of it as like a regular brokerage, except for big institutions. What I mean by regular brokerage, maybe you've dabbled in stocks and this sort of thing. So maybe you have an E-Trade account or a Fidelity account or a Charles Schwab account. It's like that, only for mega institutions. And in Genesis's case, a mega institution would be like a large hedge fund, like Ethereum Capital, for instance. And it also has some advanced features that they don't generally provide to retail, but some brokerage accounts do, like the ability to go margin long on some sort of collateral. So I've got this stock here, I've got this crypto asset here, and it's worth $100,000, right? Can I borrow against that and go do something with that leverage with that borrow? And of course, the institution, the brokerage can liquidate them, all sorts of things. Anyway, that's all it is. It's actually pretty simple. Yeah. It's just not something that regular average Joe people in crypto can access. It was the big institutional brokerage.
Yeah. Anyways, people start to get worried about Genesis just because how related they are to every other lending desk in the space. And also on November 9th, they tweet out, we took a $7 million haircut when we liquidated a bunch of collateral involving some of the Contagion involving Alameda. Only $7 million. Tiny, not that bad, not that big of a deal. They're just saying that, hey, we took a haircut. Oh, but the next day, they announced that they actually had $175 million in locked funds on the FTX trading account. But then they said this does not impact our market-making activities. 6 days later, Genesis halts withdrawals in the wake of the FTX collapse.
Not going in a good direction.
That's bad. That's a bad trajectory. And then, of course, anyone that's plugged into to Genesis, like Gemini Earn, also can no longer facilitate withdrawals. So Gemini Earn has to stop facilitating withdrawals.
And that does have retail exposure right there.
Right. And now this is max fear. Crypto Twitter was in a state of max fear all of this week, to the point where Grayscale, which is part of Digital Currency Group, part of the same subsidiary that Genesis is, although these are separate entities in of themselves, Grayscale felt compelled to tweet out, in the wake of recent events, our investors should know that the safety and security of the holdings underlying Grayscale digital asset products are unaffected, saying, hey, we still have all the assets under the balance sheet. Just because Genesis is like has a hole in their wallet doesn't mean that like our assets are affected. These are unrelated. And then on November 20th, it leaks that there was an undisclosed loan from Genesis to Digital Currency Group. Again, nothing to do with Grayscale, and I'll just plant this flag. Grayscale's totally fine. There is no further news. Grayscale's totally fine. This is just between Genesis and the larger Digital Currency Group, the thing that owns Genesis. There was an undisclosed loan from Genesis to Digital Currency Group, and that perked a bunch of people's ears. Like, all right, like, well, these are owned by the same umbrella. Why are they like loaning each other money? Anyways.
And given recent events, people are probably hearkening back to FTX and Alameda.
Exactly.
A little bit of self-dealing.
Exactly. Yes. Anyways, that was a very fast timeline. Just to recap, November 8th, no material net credit exposure. November 9th, we lost $7 million. Okay, November 10th, we lost $175 million. November 16th, sorry, new withdrawals. We don't have any money for you. November 17th, okay, we need $1 billion. November 21st, which was 2 days ago, okay, we'll go bankrupt without the money, so we need to fundraise $1 billion. And so then Frank Shapiro, out of the block, he reveals that sources tell the block that Genesis has been struggling to raise emergency capital. They wanted to raise $1 billion, but they are lowering that to $500 million because it faces potential bankruptcy without funding. Oof, not looking good. Everyone's PTSD from the week prior is getting triggered. Barry Silbert, the owner of Digital Currency Group, the guy that like owns everything, the guy that tweeted out the daisy chain of borrowers and lenders.
Basically, the Sam Sorry, I shouldn't say that Sam Bankman-Fried because that has negative connotations. Barry Silbert is not Sam Bankman-Fried from a kind of scammer perspective, but he is
the leader. He's the
leader,
figure.
the godfather, the major owner behind Digital Currency Group, which is Genesis and Grayscale and associated companies, right?
Yes. Barry writes and sends out a letter to all Digital Currency Group investors to clear up some of the details. And someone, this Twitter account, TradFi Whale, put in a nice summary thread, which we will go ahead and read here. Starting with the tweet number 1, Barry states that DCG has 3 loans: a $350 million revolver, a line of credit, to a $1.1 billion loan from Genesis, which is due on June of 23.
32.
23.
Like
that's a typo. Is it a 10-year?
I think it's a 10-year.
Okay, that's probably a 10-year. That's probably right. And also another $575 million loan due May of 23. That's the 23 loan, I thought. Yep. So what does this mean? A revolver is a short-term credit facility that a company generally pays an upfront fee to have to help with cash flow issues. It usually has a high interest rate and restrictive covenants that need to be maintained. Generally, revolvers are used as stopgaps for working capital or as a last resort in times of stress. This is not a great sign that DCG has this revolver, but then again, that's why it is there. The second loan, $1.1 billion due in June of 2032. This is where it gets very sketchy. Basically, when Three Arrows Capital went under, Genesis had a large hole in its balance sheet. I think like Three Arrows Capital blew something like a $200 to $400 million hole in Genesis.
June of this year.
June of this year, yeah.
Yes.
Mm-hmm. They were insolvent, and Genesis was insolvent. And in order to solve this, they did this a little bit of magic accounting while also putting DCG, the parent company, at risk. So DCG took on the liability of Genesis, the hole in Genesis balance sheet, but they didn't have the cash to give Genesis for its hole in the balance sheet. So they took out a $1.1 billion 10-year loan from Genesis, and then they gave the money back to Genesis to fill the gap. But up at a hole totally plugged, right, Ryan?
It's totally crazy how many people were just swimming with no pants back in June, and we didn't know. And it was all because of the Do-Kwon blow up and Three Arrows Capital blow up. And these were one of them. It was kind of tenuous at that time for DCG.
So the $1.1 billion came from the lending book, Gemini Earn, and other retail yield products that use Genesis. Oof. So retail is paying for this. Essentially, Genesis borrowed from their own deposits to fill the hole, but used Digital Currency Group as the go-between to make it legal. Yikes. Also, there's another $575 million loan due in May of 23. So, that's not that far away. So this explains why investors are balking with DCG. This is clearly not fully above board. What next? Genesis has a liquidity shortfall of $1.675 billion right now to the depositors of the lending book. It needs to file for bankruptcy. I suspect that they were trying to get someone to buy out DCG's 10-year bond at some discount to give liquidity to depositors, but no takers. DCG Grayscale business, the Grayscale business from DCG is extremely valuable. So here's what they did. Genesis was insolvent. DCG bailed it out. And so the equity holders of DCG are now at stake. The other thing that is in DCG is Grayscale. And so since it was basically the equity of DCG that plugged the Genesis hole, but the equity of DCG is involved with Grayscale. So this is where
Grayscale is minting money, by the way. I think you
printing
have a chart,
money.
I think you have a chart later on that's like what? Grayscale, and by the way, the Grayscale products are what? ETH that you can buy in a trading account to trust, and GBTCs. This is where you can kind of buy, proxy trust type ETF products, not ETFs, but those types of products inside of your retirement account. How much was that minting, David? Like
hundreds of millions of dollars.
Okay. And that's just like this year. I think there's a chart we have about that later. So that's a totally healthy, very profitable business, completely solvent. Right. The problem is that's bundled up with this whole Genesis thing. I guess the problem for DCG is, and so they're using some of that funding to try to bail out DCG.
Right.
Or, to bail out Genesis.
Right. So the equity, the value of Grayscale, the company, is backstopping the value of DCG, the equity, and DCG's equity is basically what's plugging the hole in Genesis.
Yikes.
Yes.
Okay, I see the problem.
Contagion. Yeah. And so to resume, DCG's Grayscale company extremely valuable. DCG does not want to fire sale this, so they will likely let Genesis go under DCG and DCG probably should have no problem raising $575 million by May of 2023 to pay back that loan. The question is whether they spin off Grayscale and sell some equity at a depressed valuation, or they fire sell bury crypto tokens and raise equity or long-term debt at the DCG entity. It looks like to me that DCG will not file for bankruptcy. Grayscale is easily worth over $1 billion. So, TLDR, Genesis borrowed from depositors to fill the hole in their balance sheet. Damn, I've heard that one before. By using DCG as a go-between entity, Genesis likely filing for bankruptcy. I think creditors will eventually get most of their money back, and DCG will survive with a black eye and a marred reputation. And that is the story.
Wow. You know what this looks like, David, is not quite SBF level.
No, there's no fraudulence here, I don't think, at all.
Question mark. This kind of thing is sketchy. Yeah. Borrowing, filling holes, go between to make it legal from DCG, Grayscale. This is some questionable things, some sketchiness here.
Okay, it's questionable in contrast to FTX, which was just an absolute fraud show. There's no question.
Could there be a bigger fraud?
This is all like you could probably take them to court, but like you could definitely argue that this is above board.
Maybe, yes. But what's going to happen from this is like this person predicts that DCG will survive with a black eye and a marred reputation, and Genesis will probably get some of its money back in some way. So people aren't like creditors to Genesis aren't completely sunk. I don't know how all of this resolves, but what comes out of this...
The market liked it. So the market, when this news came out,
it's not as bad as FTX, not even close.
Ether went up $100, Bitcoin went up like almost $1,000. So when this news came out, the market was like, okay, this isn't so bad.
This is a huge black eye to the Barry Silbert empire, though. Yeah. One of the OGs was just taken down a whole bunch of notches after this.
For those that don't know, DCG also owns CoinDesk. So that is also part of the DCG group.
A fire sale of CoinDesk, maybe. I don't
know. No, I don't think so.
It's all part of the same. You could sell anything if you have to. Like you have to.
Yeah.
Okay, so that's what's happening. Do you have any update for people, like retail who has money stuck in Gemini? Or for me, David, do you have any updates for me? Any good news, please?
Well, I'm happy to let you know, Ryan, that Gemini put out a tweet thread updating their Earn customers with what's going on, and they said that there is no update.
Okay.
Sorry.
I have heard through back channels that maybe some people are getting their GUSD out. Not quite sure about this, but just the GUSD.
Just GUSD?
I don't know if that hasn't been totally confirmed, but so I don't know about that. For all I know is any crypto that I had in Gemini Earn is still stuck. I do know this, and they're not really updating. They
Can we
have
issue POAPs for every instance of Ryan lost money in his crypto?
Only if we issue a POAP for David's bottom calls. Then we'll call it even. Big secondary market for bankless bad call POAPs here.
Yeah.
What's this take on the SEC? So if you to summarize,
I thought this was useful. A lot of the contagion of 2022 is underpinned by the GBTC negative premium. So in theory, one GBTC is backed by one Bitcoin. Yet there's a discount. Well, there's a discount of 42%, as in the GBTC asset is actually priced 42% below what is the net asset value of all Bitcoin in Grayscale. And that is because they can't turn the damn thing into an ETF because the SEC won't let them.
I'm going to look at the chart real quick while you're just explaining that.
That's bad.
If you want to see the chart, it is basically... If you buy GBTC in your brokerage account, buy this GBTC trust, you're getting it at a 43% discount.
Right.
To the
it's cheap Bitcoin. It is cheap Bitcoin. But there's just no assurances that discount is going to go back to zero.
Yes, and that's why it's Bitcoin, like Bitcoin TM.
Bitcoin TM,
like Ben Hunt, our friend, said Bitcoin. It's very much Bitcoin TM. It's some Bitcoin wrapped in a trust, wrapped in a proxy price thing. It's not a real Bitcoin spot ETF, is it?
Yes. Okay, so back to the tweet. I just thought this tweet was great. By failing to create an ETF for Bitcoin, the SEC allowed the Grayscale to GBTC trade to rip retail for 5+ years. That's the reason why the discount is there, is because Other people are able to milk retail out of their holdings because they're diluting retail and selling it into the market.
Also, the reason,
also charging 2% for just holding Bitcoin.
That's why Grayscale is so profitable.
That's why Grayscale is so profitable. All the net value of all assets under Grayscale charges 2%. That is an absurd fee if compared to an ETF, but we can't have that ETF because Gary Gensler doesn't let us. Anyways, the SEC also forced most trading outside of U.S. jurisdiction, which allowed for the contagion to go rampant, and also let FTX's fraud hit millions of Americans it couldn't. Anyways, I just thought that was a good tweet.
Yeah. Protecting retail? Question mark. That discount, by the way, is the record discount, 43%.
Yes,
42%
off.
I wonder if this is kind of a bottom call. It's like,
yes.
I mean, are you bullish GBTC at the?
I think this is not necessarily bullish.
Well, that would
GBTC.
cause you to be bullish Bitcoin. How about?
I am bullish Bitcoin.
Just
I'm bullish on Ether more.
Okay.
This bull market, Ryan, the 2020 bull market at the start of 2020, it was indicated by a premium in GBTC, as in people were buying Bitcoin more than people were supplying Bitcoin to the trust. So people were buying Bitcoin at a premium because they wanted demand for Bitcoin. And so the coming 2020 and 2021 bull market was marked by external outside demand for GBTC. Mm-hmm. It's been negative ever since. And so we are so low. We are 42.7% off of the premium. And that is a new low. And to me, that is just indicative of kind of another bottom signal, a bunch of sea of other bottom signals.
And you could solve this very easily if you're the SEC by just converting this sucker into an ETF. Mm-hmm. And then it basically trades for something that is much more proximate to spot price of Bitcoin. Correct. So
it would unlock... There's something like 800,000 Bitcoins in Grayscale. It would unlock 42% of the capital of all of that assets that's available.
And the reason it's going down is what? People are fire sailing?
People are fire sailing. Yeah, they need liquidity.
So
they're saying, I'm not going to wait for it to turn into one Bitcoin. I'm just going to sell at a 42% loss.
Brutal. Oh, this was the chart. Read this.
Mm-hmm. This is a chart from Sheng Chaparro. Grayscale brought in $477 million in estimated revenue since the beginning of this year for its combined GBTC and ETH products. Wow. Almost $500 million a year.
For doing what? For $500 million.
Producing that product for retail.
And what is the product? You hold custody in Coinbase custody. Coinbase custody gets a cut. What is the product beyond this? You could, I don't know how many people they have at Grayscale, but like, that's a lot. That's a very healthy margin. Does it take 20 people to run this? 30 people? And $500 million? Yeah. I mean, the last Twitter thread said that this thing was worth $1 billion. That is way underplaying it. Just do a revenue multiple on 500 million. You know what? Like a 5x revenue multiple or 10x, something like that. You're already like $5 billion, $2.5 billion. Like this thing's worth a lot because of this stupid arbitrage. Because of the... That's how, another way to say this. Retail spent, in addition to getting destroyed in all sorts of other ways in crypto, retail spent $500 million in fees on these subpar products this year.
Sick.
And it's not Grayscale's fault. They're trying to get an ETF. I mean, this piece of it wasn't.
All right.
But yeah, it's waste. Okay, so why do you think this is the last domino to fall? David is just, we'll get this out of our system. Contagion, Genesis, the last piece, and then it's over?
So the Contagion of 2022 started with Three Arrows Capital. Where did Three Arrows Capital get all of their money? They got all their money by milking the GBTC premium. Retail and traditional people would buy GBTC on the stock market. That would create the premium. What would Three Arrows Capital do? They would take Bitcoins, which, by the way, they borrowed from Genesis, and then they would get that into the Grayscale trust so that they could park at that arbitrage. And that was Three Arrows Capital's first big profit. And then they just levered up all the way and through and through and through. And so and so many people followed them into this trade. They borrowed more with Genesis. They went long Bitcoin and Ether, which worked well for them. Then they went long Solana AVAX, which went well for them. Then the Fed raised interest rates. Terra collapsed. All the illiquid altcoins went down 80%. Bitcoin and Ether went down 50%. Three Arrows Capital gets liquidated. Alameda gets liquidated. Then Alameda plugs the hole with their fake FTT funny money from FTX and also a bunch of customer deposits. That plugs the hole for 4 or 5 months, 6 months. But that hole finally opens up again. FTX is collapsed. That's gone. And now we are at the final place where it all started, which is GBTC and Grayscale. So we've come full circle. So there's that's the whole thing. And so the bull market started with the GBTC premium, and it will end with the GBTC discount. That just makes sense to me. And also Grayscale going under.
There was a pile of dominoes, but it was just in a circle, not a straight line, and last one to collapse. I think, by the way, you just gave the explanation of what just happened over the last 2 years in about 90 seconds. And we were calling this the, everything from 2021 onwards at some level has kind of been Ponzi, funny money economics in crypto, right?
You hate to see it.
No surprise then that we are resetting the clock and going back to 2021 January prices, which is about where we are. So in a way, not surprising given what's happened. All right, let's go check in on FTX and Sam. Some stuff happened this week. Let's burn through this quick. FTX bankruptcy hearing. What are the takeaways from this, David?
Yeah, so I got some notes here. So there was a bankruptcy hearing. You could have been into the Zoom to watch. But basically the TLDR is that FTX is being investigated by state and federal regulators. It's still unclear what exactly FTX has in terms of assets and liabilities because they didn't do accounting. So they're trying to figure that out. The lawyers representing FTX told the judge, "You have witnessed probably one of the most abrupt and difficult collapses in the history of corporate America, calling the FTX worldwide organization Sam Bankman-Fried's personal fiefdom and alleged gross mismanagement."
Yes.
Kind of like the Celsius bankruptcy issue, customer privacy is also going to be a big question.
Nice.
The parties are going to try and find a way to balance publishing the names, addresses, and email addresses of all creditors, including FTX's customers, and not doing that. So, how do we do this? I don't know. They're going to try and figure that out.
Don't do that.
Also, there's a jurisdictional fight between the U.S. and the Bahamas, who has the assets, right? That is at a ceasefire, at least for now. A Bahama-appointed judge, joint provisional liquidators have agreed to allow for the FTX's Digital Markets Chapter 15 bankruptcy in the Southern District of New York to be transferred to Delaware to join the other 101 Chapter 11 bankruptcy cases.
Chapter 11, baby.
Sweet. So that was the TLDR of the FTX bankruptcy hearing. Meanwhile,
what a mess.
That'll
take years.
That'll take years. Sam Bankman-Fried sends an email to employees. Did you read this, Ryan?
No, I'm reading it now.
Well, he would like to tell the employees that he's really sorry and that none of this was their fault. He said that 5 times. And I'm sure as an employee, I'm being like, I never thought it was my fault, bro. This is your fault.
But what do you say?
Yeah.
I don't know what you say. I just would stop talking at this point, but Sam seems unable to do that. I don't know if there's anything you could say. I read this whole thing. What happened.
There was nothing. The only thing that really stuck out to me, this slide was kind of interesting, where he just did some back of the napkin math about what happened, and this guy has no clue what assets or liabilities they have. He's just okay, so number one, a crash in the market this last spring led to a 50% reduction in value of the collateral in FTX. 50 billion in collateral, 60 billion in collateral with only 2 billion in liabilities.
No one cares, Sam.
Turns into 30 billion of collateral and 2 billion of liabilities. He's just doing up napkin math. Also, he's just aggregating all assets and collateral. Be yeah, this is our balance sheet. And if we
got this information on Twitter,
never mind how this is customer deposits and should not be considered collateral. Anyways, if you are interested in reading Sam's letter to employees, there's a link in the show notes.
Yeah, why not? Yeah. Make an NFT out of it. I don't know. Sad. What are we looking at here? This is a really cool chart.
Yeah, it's a really cool chart. Yeah, so this just shows the FTX SBF empire between Alameda Research, FTX US, FTX, and FTX Ventures, and all of the things that they have invested in, that they're owners of. There's a lot of investments. There's a lot.
I can't believe Sam did all of this in 4 short years, David.
Yeah.
All of this.
Yeah.
The guy came on the scene in 2018. You know what? What's kind of weird to me is we should have probably popped our heads out and been how does somebody go from nothing to $30 billion in crypto in one cycle?
Isn't that the story of crypto? Isn't that why people come here though? That is the story.
Not in one cycle. I think the Voorheeses of the people who've been here, you have to do, if you're doing this the right way, you have to do it over multiple cycles, the Brian Armstrong. And so
I'm just saying it's not really crazy to make a bunch of wealth. That level of magnitude was unheard of. But like, I don't know. I think that's a hindsight 2020 kind of thing.
Probably, but my antennas are going to be forever up about this kind of thing. Is like how did that happen? How do you go from 0 to 30 billion as your first cycle?
Well, everyone that's made a ton of money too quickly also lost it really quickly in 2022. So that definitely tracks. Meanwhile, in unrelated news, Elizabeth Holmes just got sentenced for 11 and a quarter years in prison. Completely unrelated.
All she did was scam investors. She didn't steal depositor money.
Yeah, right. Okay, but then the hacker, the FTX exploiter, has converted millions of Ether into REN Bitcoin tokens.
Oh, that's a background story. There's a hacker who's managed to get some FTX funds while their security was down, I guess, right?
Yes, right.
Yeah, we're tracking this hacker on chain.
And this was what I was alluding to earlier in the market section about why the Ether Bitcoin ratio is down this week. The hacker is selling Ether for Bitcoin, which is actually confusing a lot of people in crypto Twitter because Ether is generally the more censorship resistant, capable asset out of the two because you can do things with Ether. So on Sunday, hacker moved over 5,000 Ether of the stolen funds to a new wallet, and then later an additional 35,000 Ether was also moved over to that wallet into 3 separate transactions. That new wallet started to convert Ether to REN Bitcoin using 1inch. If you aren't familiar with what REN Bitcoin is like this inter-blockchain protocol network. So if you have REN Bitcoin on Ethereum, you can transfer that Bitcoin over to the Bitcoin network. First transactions had 4,000 Ether being converted to wrapped BTC and then traded into REN BTC. And the REN bridge has also previously been used to launder stolen funds, at least $540 million of it in other instances. And so maybe that's what's going on here. I don't really know.
David, the hacker is a Bitcoin maximalist. I think
clearly.
that explains it.
Clearly.
Good luck with that.
Yeah, right. Okay. And so there's moving on into different stories in the SBF verse. Forbes put out this article that says really that SBF he wasn't really as lucrative as he was made out to be. His 2021 tax return shows a net operating loss of $3.7 billion. They lost $3.7 billion in 2021.
Oh, that would have been nice to know a year ago.
Yeah, I would have loved to have known that. How did you lose $3.7 billion in 2021? That was the most lucrative year of all time.
No, how would you do that? I mean, margin,
leverage.
I don't even know how you do that. Leverage, margin.
I don't know.
Yeah, that takes skill.
It takes skill.
To lose in 2021.
Anyways, there's a regulator response in Capitol Hill. I thought this was a really useful thread, and I'm going to try and speedrun this as much as possible. So Ron Hammond says, this week in Congress and crypto, last week the Blockchain Association hosted our first annual policy summit with industry leaders and regulators, members of Congress and staff. The timing couldn't have been better with the FTX fiasco playing out in real time. Here is what DC is saying. Number one, they are shell-shocked. That is the word mainly used by policymakers when describing the FTX fallout. Many of them met with SBF personally, asked questions at various hearings, or at least knew how often he was in D.C. meeting with colleagues. Oof. As more reports about FTX came in, the anger in D.C. rose. Number two, the Hill is still largely in fact-finding mode, and that is important. Congress tends to have a knee-jerk reaction to a crisis, but bipartisan calls from Maxine Waters and Patrick McHenry for a hearing in 2022 showed the desire to learn, hear from various parties, and then engage. The Senate Housing and Financial Services Committee light hearing, which is going to happen, likely won't be the only one this year. The Senate Banking, House and Senate Agricultural Committees have hosted SBF several times in hearings and meetings, and likely will want to host a meeting to hear what happened and what can be done to prevent this. Number four, what could have been done? Where were the regulators? Why did FTX domicile in the Bahamas? And many other questions are top of mind. I like that last question. These are some great questions. And many other questions are top of mind in the Hill. Many still don't know, and thus a large reason to suspect both FTX execs and the regulators will be called in for these hearings. Number five, the episode will easily bleed over into 2023 when the Republicans have the House and the Democrats have the Senate. The fact-finding will still continue, and both chambers will likely find a bipartisan regulatory solution. Could be bills introduced previously or brand new.
Stablecoin bill still in play. Maybe looks like DCCPA is dead. Yeah. That's what he says. Cool. Largely dead, but it could reappear in a different form. This is interesting. And by the way, I think this is the Ron Hammond Twitter account. I don't know who this is, but I think he was the one that tweeted out about, after SBF Eric Voorhees debate, like everyone in DC was talking about this.
Yes. Yeah.
So it's
Cool.
interesting that still happened like 11 days before. People in DC, that was the conversation. And then the next week, the weeks that follow, it's this.
Yep.
I wonder how that changed things.
Damn. Bankless is on their radar. That's great.
Yeah.
In a good way. In a good way.
Wait, wait. Come on, guys. Right? We're doing the right thing here. SEC facing rising scrutiny after FTX's explicit implosion. I don't know how they're going to respond to all of this.
Yeah, so Bob Menendez, a senior Democrat on the Senate Banking Committee, was asked if the SEC could have been more aggressive in investigating FTX prior to bankruptcy. Guess what his answer was, Ryan?
Whose answer?
Bob Menendez, the senior Democrat on the Senate Banking Committee.
Oh.
He was asked, could the SEC have been more aggressive in FTX and investigating FTX prior to the bankruptcy?
I bet he said, hell yeah on that one.
He said, the article says, he replied simply, yes, and asked if he planned to question SEC Gary Gensler about that. Menendez replied, I am. Great.
I wonder what the tone of that speech pattern was. Yes, I will be doing that.
Yeah.
All right. What's this? Binance
This
taking
is
its shot?
unrelated but related. Binance US steps into national politics with new campaign pack. So Binance filling the void of FTX lobbying. I wonder how that's going to sit with Capitol Hill. Oh boy.
More crypto bankers. Woo.
Yeah.
Very excited.
This one from a
Just
different
fight
part
for
of the
our
economy.
values, guys. Please
Yep.
don't make the same mistakes. All right. Tell us about this crazy story. Here's
Okay,
the context
third
for the
big
next
story of the week. This is
Can I
insane.
just say this? So
Yeah.
in the midst of this chaos, almost like, the little finger chaos is a ladder thing. It's like the Joker from Batman. It's just, I'm going to use like chaos. In the midst of this, a DeFi attacker starts attacking DeFi. And he had been previously, but now it's like there's weakness in the industry. I'm going to go attack it.
Yep.
So give us the context here. It involves a few different exchanges, a few different chains, but try to tell us the story and then let's get to what happened.
Okay, so back in October, the end of October, there is this mango market on Solana was exploited for $114 million. It was not
a DEX, right?
It's a DEX, yeah. It was not a hack. It was an economic exploit. It was like an Oracle attack. It was basically market manipulation. So he used the exchange as intended. They were just able to manipulate the markets in a way that extracted $114 million in an economic exploit. That person is Avraham Eisenberg. And he declared that he thought that this was just simply a profitable trading strategy and that everything was legal in open market operations. Technically true. Good luck defending that in court. Anyways, he returned $67 million, defended his actions. And then later, fast forward a few weeks, also now on the Ethereum chain instead of Solana, Eisenberg would put 40 million of USDC inside of Aave to borrow $20 million of Curve, the CRV token from the Curve exchange. He then sent that 40 million Curve tokens, $20 million, to OKX with his short position on Aave. And the idea was that he was just going to dump the Curve to short it and then buy back the Curve later at a cheaper price and be able to park it the arbitrage. Same thing, economic exploit, market manipulation, trying to eke out some money, right?
This time on a bigger network with some bigger players, like Curve is much bigger than the last target.
Exactly. It just so happens that while this individual had his Curve short open, Curve releases the white paper and the code for their stable coin, which was very hyped, which caused the Curve price to stop going down and to instead go up. And he got short squeezed and liquidated. And so you can actually see the liquidations on chain because this is DeFi. And crypto Twitter is watching this all happen in real time. And so we are watching the liquidations roll in ways that we could not have seen the liquidations
from Aave?
Aave's liquidating this guy, Eisenberg, because of his short position. And so we are watching this in real time, in stark contrast to what was going on with FTX and Alameda. And so that is always nice to see.
You live by the sword, you die by the sword. That's what happens
exactly right.
playing this game.
That's exactly right. So Aave tweets out about some bad debt. So as a result of the illiquidity of CRV, actually Aave was left with a whopping $1.6 million of
million
bad debt.
with an M?
With an M, yes.
After this fierce attack?
After this fierce attack, which represents, Ryan, a whopping less than 0.1% of total volume on Aave.
Gotta be much less.
I can't remember the. I saw.
It's
a tweet.
less than 0.1%.
Excuse me.
Much less than 1%.
Yes, that's what I meant. 0.1%. Yes. I can't remember what the numbers were. I saw a tweet, but it was something like, I don't know, 8 weeks of AAVE revenue, I think at worst. And so, DeFi, even on its worst, it's still okay.
Robust, right? I mean,
robust,
all of this happened
right.
transparently. All of this happened on
people
chain.
were watching this happening.
People liquidated.
Again, Genesis had a hole in its balance sheet last May, and we didn't find out until November.
Not.
We watched AAVE grow a $1.6 million teeny little hole in its pocket, which is totally going to plug up. And anyways, so that's that story. But also Curve, the other big news is that Curve released their stablecoin.
Okay. Good timing, boys. Yeah. Wow.
And so
right.
this stablecoin is kind of like MakerDAO, but more governance minimized with an algorithmic liquidation engine. So you can put your collateral into Curve. You can mint their Curve stablecoin. If you get liquidated, it will liquidate you in the most modest amount of increments possible. And then as the price goes back up, it will recapitalize you. And so it's kind of like MakerDAO. You're still taking leverage. You're still like minting this new stable coin. But it is a new decentralized, perhaps
What's
more
it collateralized
decentralized.
by, David?
Curve deposits, whatever's in Curve.
Whatever's in Curve. And what kind of things are in Curve right now?
Like kind assets. So stablecoins are the big one, but like you have rETH.
That's cool.
Staked ETH. I don't know. I don't think that you can make the stablecoin out of the ETH pairs, but you can imagine that Curve makes the meta staking token.
Well, this is the kind of thing I want to have some more time to dig into, to be honest. To get us back to our old like kind of DeFi
roots,
building cool stuff rather than talking about FTX all the time.
Yes, this is a white paper. It's been a while since I've read a good white paper. Because
good old-fashioned white paper.
Good old-fashioned white paper.
They're coming back.
Yeah. Gauntlet Network put out a tweet, and Gauntlet, for those of you who don't know, that is Tarun Chitra's organization that they do these economic simulations. They did the analysis, and they made some recommendations. They said, the attempt to squeeze Curve on AAVE has been unsuccessful and unprofitable. Despite this, AAVE has accrued a much smaller insolvent position. Our immediate recommendation is to freeze a number of tail assets on V2 to mitigate the risk of smaller, likely unprofitable squeezes.
DeFi, all of this, these attacks happen in the open. The learnings happen in the open as well. The defense all happens in the open. This is how DeFi levels up. And this is why I think what we can build at the end of the day here is a much more resilient financial system, right? Yes. We get the attacks and we adapt, right? We get stronger. The shield increases for every attack, reharnessing the energy of the attack.
I love that that's your take, Ryan, because the next tweet is exactly this.
Oh, really?
This poor Dart Twitter account says, I think Avi, the liquidator, the Curve short seller, the guy who's trying to economically exploit all the protocols, he goes, I think Avi is good for DeFi. We need people to stress.
Avi, the guy, not Ave, right?
Avi, yes, Avi the guy. It's good for DeFi. We need people to stress test these protocols. As in, if they can be exploited, then they should be exploited. If they can't be exploited, then they're robust. And as a result, like unlike FTX, which is now gone and destroyed, unlike Genesis, which might file for bankruptcy, unlike Alameda, which is gone, when all of those things fail, they don't come back. Aave failed, lost $1.6 million, has to pay that. That's fine. But we can learn in real time, and now we are going to build back better. Ooh.
Build back better.
I don't.
David's running for office. We're not going to cut it. Editors, do not cut that. Dave wants to build back better. Read this follow-up tweet, though.
I'm also really glad the dipshit lost a lot of money.
All right, I kind of feel good about that too. Guys, we got more to cover as always, but before we get to sponsors, we want to remind you that tomorrow is 25% off Bankless Premium.
25% Black Friday sale.
It's going to be amazing.
For Bankless 2.0, which is not yet released, but it's totally coming. It's going to be sick.
Totally not a rug. Totally not a scam.
Totally not a rug. We do not take in customer deposits.
Seriously, you guys will love this. We got a lot in store for the community. So now is your opportunity. Don't say we didn't warn you. What do we got coming up next, though, David?
Coming up next, we got questions of the nation, and I know everyone is going to be asking, how the hell do I talk to my family at Thanksgiving about crypto?
Yes, please.
We're gonna try to simulate that conversation between me and Ryan. Yeah,
I'll be grandpa.
Yeah, exactly. But then also, of course, the takes of the week, which of course were some good ones, and also what Ryan and I are grateful for. So all of that and more right after some of these fantastic sponsors to help you go bankless. But if you're on the premium feed, I'll see you on the other side. The reality today is that 5 corporations control the entire world of social media. They own our names, they restrict our content, they monitor our every move. And their time is up, thanks to our sponsor, DESO. DESO is a layer 1 blockchain built from the ground up to decentralize and scale social networks. With DESO, you can own your own identity, content, and social graph, and take it with you across hundreds of applications already built on the censorship-resistant DESO blockchain. DESO's storage advantages make it finally possible to build infinite state applications that can efficiently store and index large amounts of content and data fully on-chain. DESO also offers multiple crypto-native monetization primitives for developers and creators, including social NFTs, social DAOs, social tokens, and social tipping. So in order to experience the social layer of Web3, go to DESO.com and claim your username. That's DESO.com. Sequence is the all-in-one developer platform you need to build Web3 games and applications. For your users, Sequence is a smart wallet, and it's the easiest, most intuitive onboarding your users will ever experience, and comes with all the features users need to feel empowered in the Web3 world. Multi-chain support, NFT display, and users can buy SFTs, NFTs, and crypto directly with a credit or debit card. For developers, Sequence is the plug-and-play platform for Web3 games and apps. Their APIs let you bring NFTs, SFTs, and tokens into your game or application. And a Sequence relayer enables gasless transactions for your users. Sequence already powers some of the best Web3 games like Skyweaver, NFT projects like Cool Cats, and marketplaces like NiftySwap. And Sequence is compatible with all the EVM chains, including Ethereum, Polygon, Binance Smart Chain, Arbitrum, Optimism, and Avalanche. So go to sequence.xyz/bankless to start building, or speak with the Sequence team today.
We're going to get to what we're thankful for a little bit later. There's actually another sponsor cut before we do that, David.
Yeah, I jumped the gun on that one.
Got to get through a few things. Withdrawals are coming soon. Mm-hmm. So if you are staking ETH, you have your ETH locked as a one-way ticket. We all know this. Withdrawals, there's some updates on that. There's a lot of FUD out there saying withdrawals will never happen, that the Ethereum Foundation deleted it from the roadmap, blah, 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 blah. They're happening in 2023. But what's the update here?
So in order to unlock withdrawals, we need all of the clients to have that enabled. And so there is a new DevNet with all the clients, Lodestar, Teku, Lighthouse, Nethermind, Geth, that is up and running. So there's a successful DevNet with withdrawals up and running. It's basically what you need to be able to test this thing. And then next step, mainnet. Rumors that it will be in the next hard fork, we do not know. We do not know.
I just don't listen to the Twitter accounts. Look at what the devs are doing. Look at the GitHub repos and the progress that's being made. Okay, speaking of devs, Flashbots, they've just open sourced their block builder, which was big in and of itself. So that brings some more competition in the space. And also, they have a new short-term censorship resistance strategy. So here's Vitalik saying there is a new short-term censorship resistance strategy dropping, courtesy of Flashbots, and he recommends that any staker using MEV Boost, which many are, take advantage of this new option. David, what does this new option give us, and what problem does it solve for the Ethereum protocol?
Yeah, the problem that it solves is that block building is a pretty damn specialized expert level activity. And it also block building, whoever can be the best block builder will build the most profitable block. What we're worried about is that activity becoming highly centralized. So with Vitalik and this new Flashbots blog post and this new thing that you can now plug into, we are trying to do a best of both worlds thing. You always want to choose the most profitable block, but we also want to be resilient, not have centralization, and also be able to construct our own blocks. So this is really this new update that allows for an optimization function. So when a block builder produces an extremely lucrative block that passes some level that you set in your node, you can accept that block builder's block. And if it doesn't cross a certain threshold of profitability, you as the node operator can just build your own block from home. And if you do that, if you build your own block from home when there's not an extremely profitable block, when there's just like normal DeFi things, not crazy DeFi things, if you just build it at home, you're going to get 99.9% of the value that you otherwise would have gotten if you had used a block builder. If a block builder sees some crazy MEV and they capture that and they build you a block, and your block was going to earn you 2 ETH and that block builder's block is going to earn you 5 ETH because of this optimization function, which is what this release is, you can opt in to the occasional high value block when it is produced by a centralized block builder. And that, Ryan, is how you get the best of both worlds.
That's cool. Yeah, my TLDR on this, because my brain was kind of full this week when reading this, is like they're trying to make doing the right thing for the network more profitable.
Yes.
And decreasing the cost of doing the right thing. So basically you opt into this and you still get 90% of the, maybe 99% of the profit. And you're doing the right thing for the network, which is you're decreasing centralization. You can still run staking from home, your own validators, and you don't have to centralize. And that is a good thing for decreasing the centralization of Ethereum and increasing decentralization, of course, increasing the censorship resistance of the network. David, this is cool too. Matic, Magic Eden, Match Made in Heaven. Magic Eden is a Solana NFT ecosystem, and they are moving to Matic. Not exclusively, but they're deploying now on Matic. What's the update here?
Yeah, that's basically the update. They deployed on Ethereum not too long ago, and now they're also on an Ethereum layer 2. Is this the layer 2 thesis playing out? I will leave that up for the listener to decide.
Tantalizing. Yeah. How about this?
Oh, I love this one. rETH adds collateral in MakerDAO. rETH out of Rocket Pool, the staked ETH token out of Rocket Pool, the friendly neighborhood decentralized staking as a service protocol, is now collateral inside of MakerDAO. This is huge for rETH liquidity. This is one of the big things that Rocket Pool really needed to be competitive with Lido. There is a $5 million DAI debt ceiling, but that's just like the first rodeo.
That's where it starts.
It's where it starts. Yeah.
Very good on that. Okay. Also, Arbitrum is
new
updating.
Arbitrum feature. This is actually really sick, and it's interesting that Arbitrum didn't actually really be loud about this. So basically, we all know that our layer 2s are more centralized than we would like them to be. Becoming a validator for a layer 2 for Optimism Arbitrum is a permission thing. You can't just go do that. But Arbitrum recently did this upgrade where if the centralized Arbitrum run validator sequencer goes down for a sufficiently long a period of time, the network becomes permissionless and anyone can spin up a new Arbitrum validator and join the network to start processing withdrawals. That is crazy. And that is something that is implemented today. That is neat.
This is good. This is very
good. This is like it. We like this.
This is decentralizing our layer 2s, which was always going to come, but it's happening faster than I thought. So great job in Arbitrum. This is from Bartek too, who really keeps track of this stuff.
Yes.
So if you want to read the whole tweet thread and what they're doing, you can do that. And you're right. They didn't get loud on this. It's because so much going on. Speaking of getting loud, we talked about collectibles last week. Bankless launched its first NFT collectible project. At high level I didn't know that 100 were going to sell, and I didn't get one, David.
I also did not get one.
It sold out in the first minute, and I spent $50 or something on ETH gas fees, and I was clicking refresh. I was doing the thing that you told me to do with NFTs, which is get there first, and I still didn't get one. So
I did not expect there to be this level of demand.
I guess the good news around that is more are coming, including, I think, not tomorrow, so don't worry about it, take that off the holidays, but the Friday after. And so you can get the next in a series of Genesis collectibles. The first one is
really quick. Back up though.
Yeah.
What the hell did we drop? It was SBF Eric Voorhees. We are now turning our podcast into collectibles. That's what's going on.
That's what's going
on. We turned the SBF versus Eric Voorhees into a 1 of 100 collectible, which we sold for 0.05 Ether. All revenue went to Coin Center. Also, all royalties also go to Coin Center. 100% is going to Coin Center. And we sold it for 0.05 ETH. The floor is now 1.9 Ether. That is insane. I did not see that coming. There have been 3 sales at 1 Ether. Turns out collectible podcasts are a real thing.
Also turns out I will never make money on this NFT thing, David, because I always miss the great opportunities.
You can't even make money on your own NFT, bro.
That's how bad it is. I would have had one on the back on this monitor here, and it's just dark.
That would have been cool.
Yeah, would have been cool. I could have been cool.
Great NFT for that monitor.
Anyway, what else we got? Tornado Cash. This is sad. Alexey Prison is detained still in Amsterdam. For another 3 months. That was a renewal. He was in there for 90 days. So this, again, is the developer, one of the developers responsible for creating Tornado Cash, the privacy tool on Ethereum that U.S. citizens can no longer use. And Alexey Prison finds himself in prison as a result of this. No charges have been laid. So another 90 days in prison. That's the reports that we're getting out. Look, man, unfortunate. People like I can't believe this. People like Alexey.
Sam Bankman-Fried is running around with his cargo shorts and backpack in the Bahamas
sending
right now.
I'm sorry letters to his staff, right? Like, and Alexey Prison is in prison right now.
Yeah.
And why?
Sweet.
Because he put together a public open source privacy tool for the entire world. Okay. Yep. It's like coming up with SSL or some kind of like encryption technology.
Well, do you know why they cited this as like what they're doing, like not detaining him for another 3 months? They cited it's the governance token. Because he was an owner of the governance token, he is like an operator of the business.
This cannot stand. We've said this before. You guys have heard us talk about this, but it's just really sad that injustices like this go on, especially when you see actually who the threats are to crypto and to actual retail. You see someone building real code here. So very unfortunate. We're doing what we can here, including one of my good friends and a co-host of this podcast is actually suing Secretary Yellen as we speak. So we're doing what we can, but just keep Alexey on your mind as you hear about the scammers like SBF. Remember, we've got some folks that need help. JPMorgan, a crypto wallet, now a registered trademark in the U.S. I saw this headline. Go forward. Anything else that we should say about this?
Patents are kind of a no news kind of news.
What's a trademark?
It's like an indication of like, okay, in 3 years we'll like see a JPMorgan like product thing.
It's a trademark.
It's a trademark.
The JPMorgan wallet.
It's something.
I don't think I would ever put money in a JPMorgan wallet.
I hope you wouldn't. But actually, I kind of think you would because you put money in all the other centralized
No
exchanges.
more. Never again. All right. I told you guys it's an experiment. It's not something I was, issue the POAP, whatever.
Anyways, okay, coming out of Coinbase and Optimism, you can now transfer from Coinbase to Optimism. Hey, cool. Great.
Good job.
I mean, it was a long time coming. Glad it's finally here. We asked for this, and Brian Armstrong delivered. Great.
We asked for it. David and I went to Brian. We're like, yo, the one thing we need is this. And he just
We literally did that. It was on the podcast.
Oh, yeah, we did. True story. Bitcoin, bad news in New York governor. What's this?
Yep. New York governor signs first of its kind law cracking down on Bitcoin mining. Governor Kathy Hochul signed a law on Tuesday. That's my governor. Banning certain Bitcoin mining operations that run on carbon-based power sources. For the next 2 years, unless a proof-of-work mining company uses 100% renewable energy, it will not be allowed to expand or renew permits, and new entrants will also not allowed to become online. There's a quote from the Chamber of Digital Commerce here that says, "This approval will set a dangerous precedent in determining who may or may not use power in New York State." And that is a take that I 100% agree with. Let's not get political about what we think is good or not and who can have access to energy. That is bad.
I totally agree because I like Christmas lights and I will continue to put Christmas lights up in my house.
And Christmas lights in Bitcoin mining is probably the same amount of net global energy.
It's less, my friend. Bitcoin mining is less.
Less than Christmas lights?
Yeah, but yeah. And this is a thing. It doesn't affect Ethereum and other ecosystems we care about. And like we knew this political pressure was coming, but that doesn't necessarily make it right.
Yes.
All right. Raises. So one big raise this week across protocol. They just raised $10 million or $200 million valuation. This is, of course, is a bridging protocol we've told you guys about a number of times. Maybe you're using it. Maybe it's on our airdrop guide. Maybe you get
maybe it's
you become
sponsor,
a premium
so
member. Oh, are they? Yes, they are. The good news there is when companies are raising, and they still are, there's still some money in crypto, it means you can get a job in crypto. That's what we got to tell them about. The Crypto Jobs Board. Developer relations at Uniswap. A front-end engineer at Uniswap. Earnify. Coming in hot. Coming in new.
Woo!
Looking for a full-stack engineer at Earnify. Looking for a senior back-end TypeScript engineer. I like that Earnify company. Think they're doing big things. Uniswap Labs, NFT engineers. A lot of engineers on here. You can tell it's the bear market. Now we got no non-technical jobs. It's all technical, David. Because we're building. We got to build.
Because we're building, yeah.
Anyway, you want access to those, go to the Bankless job boards, bankless.pallet.com, and you can find that, of course. Black Friday shout out, 25% off, coming to you tomorrow. Get your Bankless Premium. And what do we have coming up next, David, after the break?
This time, we'll talk about how the hell do I talk to my family about crypto.
Yeah, you rugged us last time.
I did, big rug. People just don't care about Ethereum withdrawals, I swear. How do I talk to my family about crypto, followed by the takes of the week, followed by what Ryan and I are thankful for. So stay tuned for all of that and more right after we talk to some of these fantastic sponsors to help you go bankless, because you need it. Arbitrum One is pioneering the world of secure Ethereum scalability and is continuing to accelerate the Web3 landscape. Hundreds of projects have already deployed on Arbitrum One, producing flourishing DeFi and NFT ecosystems. With the recent addition of Arbitrum Nova, gaming and social dApps like Reddit are also now calling Arbitrum home. Both Arbitrum One and Nova leverage the security and decentralization of Ethereum and provide a builder experience that's intuitive, familiar, and fully EVM compatible. On Arbitrum, both builders and users will experience faster transaction speeds with significantly lower gas fees. With Arbitrum's recent migration to Arbitrum Nitro, it's also now 10 times faster than before. Visit arbitrum.io, where you can join the community, dive into the developer docs, bridge your assets, and start building your first dApp. With Arbitrum, experience Web3 development the way it was meant to be: secure, fast, cheap, and friction-free. If you've been listening to Bankless, you know that we're fans of the modular blockchain thesis. The idea that blockchains will separate execution from data availability and consensus, allowing all three to become the best versions of themselves. And Fuel has built the fastest modular execution layer in the industry. By supporting parallel transaction execution, Fuel unlocks significantly faster throughput for the Web3 world. Fuel also goes beyond the limitations of the EVM with its own Fuel VM, which is more efficient and optimized, opening up the design space for developers. And lastly, Fuel brings a powerful developer experience with its own domain-specific language, Sway, and a supportive toolchain called Fork. With Fuel, you can have the benefits of smart contract languages like Solidity while adopting the improvements made by the Rust tooling ecosystem, letting the Fuel development environment go beyond the limitations of the EVM. If you want to learn more, there's a link in the show notes to see how you can get involved with the Fuel network.
Questions from the nation, David. I think in the US it's Thanksgiving morning. So the one thing that happens, tradition in the US, is you get together with friends and family. And these could be relatives you haven't seen for maybe an entire year. You haven't seen in a very long time. They probably know that you're in crypto, right? Because like it's that weird thing that you do on the side.
And you can't stop talking about it?
Yeah, maybe it's because you can't stop talking about it. Maybe they've asked you questions, they've texted you about like buys. Anyway, your family knows that you're in crypto. So what do you say to them when they ask you questions? How do you talk to your family about crypto this Thanksgiving? Some real practical advice here. I think this is the question from the nation today. Actually, we're putting together a post on this from Michael Wong, who's one of our writers. And there's a number of questions here we could get to. But let me, before we get in here, David, just the high level, all right? What are you? Do you have family members like this who are kind of distant relations? They know like, oh, David's got some podcast. I think your family calls you Dave, right?
Yeah, some of them, yeah.
All right, so it's like Dave's got this podcast, and he knows he's in crypto. What's going to be on the top of mind? What questions are you expecting to be asked?
So this year, they're not going to be bothered to answer because I've been in crypto long enough. So I'll go backwards to like 2018 Thanksgiving, where like, what did I do back then? And so they were like, oh, like David, like, are you going to like leave crypto now that everything's on fire and like the whole industry is like collapsing? There's two answers to this. What are the words that you say? But also, I think that's less important than how you say it, because humans respond to emotion. So if you come into Thanksgiving and people are like, is your conviction shaking about crypto? Like, how's your job going? Like, you still doing that crypto thing? You just got to come in hot and be like, damn straight, I'm still doing that crypto thing. Like Sam Bankman-Fried, a banker, showed all of the industry exactly why we need to not have banks. And now I'm fired the F up and I'm doubling down.
Oh my God.
And you should totally buy Ether right now because it's so cheap.
Wow, that's what you'd say to them? Is this what you said in 2018?
So like there was like, oh, the ICO mania is over. I'm like, yeah, it turns out it's a bunch of hot air. Turns out our DeFi yield farms were like not really all that sustainable.
Yeah.
But like it's still going to be the global like foundation of all future finance, and like NFTs are still going to unlock a ton of human culture. It's really just about like, is your conviction shaking? Are your conviction shaking? And you just need to be a stoic individual because of how you understand that this is
you come at them hard though. You're not only being stoic. You're like, and also Grant, but you should have some ETH.
that part you would be excused to say if you don't give your family members financial advice. Don't do that. It's about the conviction, right? Because people are like going to be like, oh, like like some of them, especially some people love to be like, ha ha ha, crypto broke. Now I don't.
That one cousin that you have.
Right. The people that don't want to have to deal with the cognitive dissonance of 2021 when like all the crypto people were making money.
Yeah.
And now it's on the flip side of this. Now they're going to be twisting the knife. But hey, remember when you
Schadenfreude.
told me to buy $4,000 ETH? Well, so glad I didn't.
Yeah.
And
Remember
like,
when you said it was going to 10K? You idiot.
Right. Yeah, and then you say like it's still going to 10K.
Yeah,
it's still happening.
Like,
and so I'm buying more.
Yeah, like yes.
It's about the conviction, and it's about like, hey, like there's a mission here. If you can show that you believe in this, that there's a mission. That's actually how Ryan, my first company in 2017 that blew up, it's an ICO advisory company destined to blow up.
Yeah.
I got a 130% person company. I think 5 or 6 or 7 of those people got jobs in crypto after that. I was one of them. One of the reasons why I survived through the 2018 to 2020 bear market.
You still had conviction. You still believe.
Because I was enthusiastic and people saw it. Like I was very clearly about the tech. And that's what like kept me a very hireable person when there was literally no jobs left.
So it's just like, is it kind of an answer of like, I don't look at price at times like this. I look at the fundamentals and you look at what went wrong.
Yes.
And
That's a great way to do it. Yes.
A banker blew up the financial system. He's posing as something he wasn't. And we're glad we're detoxed. We're going to come back stronger. That's if you even want to engage in that conversation. It depends who you're with. I don't know. Family relationships are,
You also don't have to bring it up. You can also relax
smile.
and not talk about crypto.
Yeah, you could just smile and be like, yeah, it's been rough lately, and then change. That's more like my mode is I just try to not talk about it, honestly. Because if they want to hear what I really think, I mean, oh my God, how many hours of content do we actually have, right? Like, it's almost like you can opt into it. But okay, so here's Grandpa saying, how are you doing job-wise, right? And you got an answer for that. Mom is asking, what happened to Nexo, Celsius, Voyager? My friends used it and lost it all. Sorry, Mom. You got to have an answer for that.
Ryan, here's a hard one. And this is one that's in the actual newsletter. Somebody says, hey, I have my money on Coinbase or Gemini. I'm worried about like Gemini Earn or something. I would just like to take self-custody of your assets. Like, where do you start with that?
Yeah, I think so. There's a difference between like Gemini Earn and a like crypto lending thing and like just having your assets on an account. So first of all, you want to make sure it's a reputable account, right? Like a Coinbase, maybe a Kraken. I'd put there still Gemini, even though their Earn program is going through some struggles. And then you kind of have to weigh it, David, because you have to weigh the risk of one of these exchanges going under versus your relatives' risk of losing their own keys if they mess up a setup. And this is really important. It's just I actually don't love going through the process of teaching like friends and family about it too much, unless they are kind of coming to the table with their knowledge and their learnings and they're asking me more specific questions, right? Because if you kind of do the work for them, then they weren't really ready to hold on to their own keys and self-custody. You kind of have to just like, hey, you can leave it on exchange until you're ready to move it off and then go figure out what you think are some of the best. And then I'm happy to give you some help or pointers or that sort of thing. But like making them do it themselves is kind of a key because that's like an acid test of are you ready or not, right?
Right. Yeah.
That's what I generally do, but it's important. Are you going to be single forever? That's Grandma asking. Wow, there's a lot of good questions that come up in Thanksgiving. Right. You have anything else to end it with? What else can people expect to be asked?
What else can people expect to be asked?
Is price going down to zero? Is crypto dead?
Yeah,
I feel like we've tackled that.
I think really the main point is like Celsius, FTX, Three Arrows Capital, like there's all these buzzwords that people have heard. And I think all you really need, if you are going to talk about this, all you really have to say is like, yes, this proves exactly what crypto is here for and teach them the delineation between FTX and crypto. Like that's really the point to drive home.
There you go. And then tell them to listen to Bankless if they're really curious.
All right,
Takes of the week. What do we got here?
Yeah, this is a fantastic automated take from this guy, Ryan Sean Adams. He tweets out, the Tower of Babel is a story about mankind getting too full of themselves and trying to build a tower to reach up to the heavens and become gods. So God foiled them by confusing their language and scattering them all over the earth. Where is this written? Genesis chapter 11. Wow.
Dude, that is no lie. All right.
Oh, yeah.
I looked this up because I was like, Genesis, I wonder what's in chapter 11 of Genesis.
No way. Wow.
No, this is real. Okay, Genesis chapter 11. Look this up. I'm Googling it now.
Wow, that's great.
This is the Tower of Babel. This is the whole thing. And it was really about mankind's hubris. It's kind of like an Icarus type story of like you trying to be bigger than God. And then what happens, David? God foils their languages. They all start speaking different languages, and they scatter all over the earth so they can't complete the centralized project. They decentralize, David.
Wow.
Centralization.
So, that's crazy.
Tower of Babel goes to decentralization afterwards, and this is all Genesis chapter 11.
Let me tell you, the scripting in 2022 is just like off the charts, man. I just Googled why is it called chapter 11, and turns out it has nothing to do with the Bible. So that's just
no, it doesn't. No, that would be too much. All right, that would be too many hints in the simulation there. All right, what do we got? Arthur Hayes. No, this is
Takes of the week. Takes of the week.
Yeah, what's his take?
Arthur Hayes is retweeting a Suzu quote. Suzu, founder of Furos Capital, says FTX set crypto back years. Arthur Hayes says, per the zoo per cycle in reverse, where's my money, mofo? Basically saying, Three Arrows Capital says FTX set crypto back years. So did you, bro. Like, what?
I think Three Arrows Capital is on a mission to be like, this one's worse than us. So can we come back now? No, you can't come back.
Okay,
Sorry.
this one was my take. I want to walk through it.
I'm going to read it though.
You want to read? Okay.
Yeah, because or else you'll seem too self-aggrandizing if you read your own tweets on the show.
Right. People already think that I'm too self-aggrandizing.
All right. 2013. This is David. A proof of work fork and fair launch. We printed proof of work coins in 2013. 2017, ICO mania. We minted ICO tokens. 2021, yield farming. We issued governance tokens. Every bull market is a Ponzi scheme under the guise of new token distribution models. And the emoji of slapping hand on forehead.
Yep.
It concludes this tweet.
The Bitcoiners really like this one because they're like, oh, David's finally figuring out that anything outside of Bitcoin is just a big Ponzi scheme. But then I would actually like to go to Exhibit A, my next tweet, which is platform that is for finance is synonymous with a platform for Ponzi's. And so, like we've talked about this before, money is real, finance is perceived, Ponzi's are just the like extrapolation of that on steroids, right? Perceived money, hot air money. And so this is really how bull markets in crypto start. We create something cool. In 2013, it was like, oh, we can fork Bitcoin a bajillion times. Let's do it. And then in the ICO mania was like, oh, we can just mint a token. Let's do it. And then in DeFi yield farming, it's like, oh, we can just like have these governance tokens and do yield farming to produce yield and attract investment. Let's do it. And then it just gets, mutilated, right? So starts with a core primitive that adds a tool to the tool belt of this crypto economic future. And then we like eke out all possible hype and value out of it over the next year. And then that's when people get hurt. It's a little bit frustrating, but that's how this industry proceeds forward.
It's frustrating, but like it collapses back down to like its true utility value, and the cycle resets again. There was no super cycle. It was just always the human cycle of like, it's just basically the hype cycle, right? All the way you go up to the point of, I always said euthanasia, euphoria. And then you come back down and like the cycle resets every single time. I think that's what we're seeing here. What are you thankful for, David? This Thanksgiving, November 2022, November 24th, people are listening to this. What is David Hoffman thankful for this year?
Oh, there's a lot to be thankful for. I am excited. It's going to be practice for me to like go home with my family and like for the first time, I actually don't really want to talk about crypto things. I just want to cook food and hang out with my 1.5-year-old super adorable nephew. And so I'm definitely thankful for that. I know I'm also thankful that it appears to be that we're like at the basement. You just said just now that like we are back to our like actual value of these networks. Like nothing is hot air. These are now real. And so I know it's corny, but like we're going to build our way out of it. And now the amount of signal that we're going to have over what's being built over the next 6 to 18 months is going to be so high. There's not going to be any fluff. And so all of the hot air is out of the industry, which just lets everyone progress forward faster. And I remember in 2021, you and I talked about this, is like, as soon as the bull market got frothy and manic, you and I were like, this is tiring. Like, we need to wash this stuff out.
I didn't like it.
Right. We got our wish. Everything's washed out.
Too much, though.
And a little bit too much. I was talking with some Friendsgiving. It's like, so we lost some of the baby, but the bathwater's definitely all gone.
Yes.
And so, I mean, we're on the other side. And so, like, now there's only signal. And so I am thankful for that.
Yeah, I think that's a great thing to be thankful for. And, you know, look, David and I met during a bear market, right? It's really a fantastic time to be in the industry, be a settler. You meet some of the best people. And I guess that goes to what I'm thankful for, David. I'm thankful that, Bankless listener, that you're still here. If you're listening to this right now, it means you are a settler and not a tourist, all right? Because the tourists, the last few weeks, the last 6 months, 2022, they left, or they're in the process of leaving, but you're still here. I tweeted this out earlier. If you didn't make it this time, make sure you make it next time. Crypto's not dead.
Yep.
This is a multi-year, multi-cycle, multi-decade experience, right? And we've always said this is long-term. It's not about overnight gains. You're still here. That means I'm confident you'll be here for the next cycle, and you'll be maybe a veteran the next cycle. You know who responded to that tweet, David?
Who?
Our friend Anthony Sassano. And he said this. He said, I didn't make it in 2013, 2014. I didn't make it in 2017, 2018. I made it in 2020 and 2021. My overnight success was 7 to 8 years in the making. That is the opposite of SBF's story.
Right.
Of make it rich in one cycle, crash and burn. All right? This is actually all of the people that I've seen in crypto who've quote unquote made it. And when Anthony says he made it, he clarified that he's talking about like he's now financially independent and he can do what he wants and work on the projects he cares about, right? That is part of, you know, we say at Bankless, like in order to make you healthy, we have to make you wealthy, right? But like wealth doesn't come overnight. All right. And so this is a multi-year, multi-cycle thing. And the bottom line is you're still here. So I'm optimistic about your future because you are still here. And this is what everyone I know in crypto who's quote unquote made it to the other side has been here for multiple cycles. And it goes back to like the quick shortcuts often just like crash and burn. Like you can't, it's not about the things that are easy, right? You got to find the things that are hard, but still worth doing. And for me, that's what crypto is. Like sometimes, David, in the euphoric cycles, I felt like, oh my God, like we don't deserve this. I don't deserve this. What did I do? I just helped. Here's where you earn it. Here's where you earn the upside in a way that you shouldn't feel bad about it. You shouldn't feel bad about a 10x or like a 50x on the last cycle because you were here during the bear market. And I know you resonate with this story too because you know, like quote unquote,
story,
like you made like it's Anthony's story, right? Of like you made it because you persisted during the last bear market. Yeah.
And just to drive that point home one more time, the people that stuck around after 2017 to 2018 and stuck around during the bear market of the very long, hard bear market of 2018 to 2020, everyone talks about the most lucrative time was DeFi summer. That's when all of the money was made without much of the risk, without much of the degeneracy. And people that were around for DeFi summer saw the 2021 bull market coming a year ahead of time. And so if you want that level of front running the opportunity, you got to stick around.
That's right. Stick around. And we're going to continue to be putting out content for you. Look, 99% of everything that we do is completely 100% free. So I know we've been talking about the Bankless Black Friday sale that's on throughout this podcast. That's if you want to take another step on the journey. That's if you want to get some extra type of thing. But if you can't afford that, okay, just know that there's a place for you in the Bankless Nation. By the way, it's only $13 a month, but still, I know, like, if you have to choose between Netflix or Bankless subscription, I'd still do Bankless. But maybe there are some other choices you have to forsake. So we're still going to be putting out content. The vast majority is going to be free, and we hope you stick with us. Be a settler. I think you'll appreciate it on the other side.
100%.
All right, let's talk about meme of the week, David. I hope we got a Thanksgiving meme today.
I think we do. This was Perchy out of Bankless DAO. This is in classic Perchy artistic fashion. And it's 4 people around a dinner table. One person's talking. One of them has a very furrowed look on his face. And the person that's talking says, I read an article about SPF. it sounds like he was a complicated and somewhat controversial figure. And clearly the crypto person is just angry because he's actually a fraudster.
Yeah, at that point, you have to choose whether you want to say something at the Thanksgiving dinner table or not. But yeah.
I think the response to that one is like, he had bank in his name, Dad. Come on.
All right, guys. Hope you enjoy some time with your family if you're in the U.S. If not, thanks for humoring us during this American Thanksgiving episode. Risks and disclaimers, got to tell you, of course, as always, crypto is risky. So is DeFi. So is ETH. So is Bitcoin. As we've seen this year so many times, you could lose what you put in. But we are headed west. This is the frontier. It's not for everyone, but we're glad you're with us on the Bankless journey. Thanks a lot.
Hey, we hope you enjoyed the video. If you did, head over to Bankless HQ right now to develop your crypto investing skills and learn how to free yourself from banks and gain your financial independence. We recommend joining our daily newsletter, podcast, and community as a Bankless Premium subscriber to get the most out of your Bankless experience. You'll get access to our market analysis, our alpha leaks, and exclusive content, and even the Bankless token for airdrops, raffles, and unlocks. If you're interested in crypto, the Bankless community is where you want to be. Click the link in the description to become a Bankless Premium subscriber today. Also, don't forget to subscribe to the channel for in-depth interviews with industry leaders, Ask Me Anythings, and weekly roll-ups where we summarize the week in crypto and other fantastic content. Thanks everyone for watching and being on the journey as we build out the Bankless Nation.